I wanted to call this meeting to address some concerns that Sue is facing with one of our very first Pandora customers, which thankfully is a longtime audit client. I wanted to walk you through how it fits into modern auditing, especially integrating data analytics with AI. Pandora is a powerful tool empowering accountants to detect anomalies in real time and using predictive analytics to report potential issues before they escalate. The first point I want to bring up is defining data analytics and how we have implemented tools from the field to allow our team members to get a better top-level understanding of the financial data they are responsible for over the course of an audit. And secondly, I want to address artificial intelligence and its use case in our services. What is data analytics? We could break it down to data, which is simply information, and analytics, which is the study and use of that information. The term is gracefully organized so that we can interpret it as to study information. Typically, during the audit process, we go through multiple tests that help us determine whether or not the processes and procedures are firmly in place and followed throughout the fiscal year. The way these procedures are followed and enforced are developed through controls. When these are issued properly, new hires or even seasoned employees have a framework that can help determine and maintain tasks that will affect the financial statements. One of the tools we employ, among many, is data analytics. There are several aspects of financial statements that become easier to view from a year's worth of data, the most important of which is revenue streams and transactions that involve revenue accounts. This client has a team of 20 senior accountants and 10 junior accountants dedicated to their audit due to its myriad of subsidiaries and pass-through transactions. And we cannot fail to mention how many other teams are involved, from information technology, tax specialists, valuation specialists, and others. Since this is a Fortune 100 company, the desire to decrease the budget is out of the question, seeing they are a company that has over 2 billion transactions per year with plans to expand. And given analysts' expectations, it is going to happen sooner than previously anticipated. What we need to do is attempt to show them the value of our operation and that our services are made possible through global collaboration with our many international offices. And our accuracy is already second to none, but we will ensure even greater success for their continued business. This will require us to add tools to our arsenal, such as artificial intelligence. In practical terms, Pandora applies data analytics techniques like full population analysis, checking every entry instead of a sample, to reduce sampling risk and get a clearer picture of the client's financials. For core audit areas, such as revenue cycles, it can flag anomalies in transaction data, or in journal entries, use machine learning to predict and highlight odd postings that might signal errors or fraud. AI integration here means smarter, faster insights, like forecasting inventory shortages based on historical trends, which ties directly into substantive procedures under standards like PCOB AS2315 for obtaining sufficient audit evidence. With that being said, I want to pass it over to my team to explain the importance of keeping experienced auditors a part of the process in Section 2.